Hey, Dan Passarelli here. Happy Friday. Ready for the weekend? I know I am. The S&P 500 closed down today 2.7%, with SPY closing at 653.02. And that, if you haven't heard, was on news that China sent some letters out to apparently a bunch of countries saying that they were going to put in export controls on everything rare earth coming out of their country. Now, that is kind of a big deal. That would put a lot of price pressure on companies, and there's not every company uses rare earths to create products, but they do use products that use rare earths, like computers, for example. They use rare earths. And so that would put price pressure on a lot of companies, both directly and indirectly, and that would be really, really bad for U.S. stocks, for stocks in any countries outside of China. Now, the other shoe to drop on that was Trump said that he would consider retaliating with quote unquote massive tariffs. And while it's 100% accurate that export controls out of China on rare earths would definitely harm the market, the jury is still kind of out on exactly how much damage tariffs will do in the short term and in the long term. And so that we don't really know yet. We don't have a great feel for that yet. But I think that the market certainly did interpret that shoe dropping, the tariff shoe, as also a negative. So we kind of get the double whammy from there. And it's trade wars. That's just bad for economies individually and globally. So Trump said that he was going to meet Xi in 2 weeks in South Korea and said now there's no need. So that's kind of some tough talk, which could escalate the trade war or de-escalate it. I don't know. We'll have to see. But what do we expect next week? Well, next week we have a lot of Fed speakers speaking. The Fed is self-funded, and so those guys are going to keep talking and going to conferences and releasing data as well. The next Fed announcement is in, about 10 days or something like that. Also, individual corporations' bank earnings are out next week. Also, the Bureau of Labor Statistics said next week they will be releasing CPI data, which apparently they have to do for inflation index bonds, government bonds, and that kind of thing, I guess. So that is one number we will be getting out of the government next week. CPI is not the Fed's preferred inflation gauge, but it's a pretty important one. We will not, if the government remains shut down, we will not be getting jobless claims or PPI or retail sales next week, which typically are pretty key things that people look at. So that being said, friends, this is a great weekend to go and look at your portfolio. Take a look for opportunities to maybe get some value discounts and sell some cash secured puts on some wish list stocks that you've been wanting to get into at a good price. Not that the market can't drop more. It certainly could. Bottomed out here at the 50-day moving average, but selling puts is a way to potentially get into stocks if the market does drop more. You may take some heat in the short term and be down on those for some point. But hey, if you're talking about value long-term holdings, 3 years from now, 5 years from now, that's what you're aiming for with those sort of investments. So I love personally doing those kind of things. And that, friends, is all I've got today. I hope that helps. This is Dan Passarelli. Trade smart. Have a great weekend, and I'll see you next week.